You're watching News 9 Live. I'm Karthik Malhotra, and all the top stories from the world of business from all over the world coming your way right here on World Business Report. The top story on this edition of World Business Report: Elon Musk has sharpened his prediction, stating that superhuman artificial intelligence surpassing the intellect of any individual could emerge as soon as next year. This assertion marks a notable adjustment from his previous estimate of 2029. While superhuman typically denotes exceeding individual human capabilities in specific tasks, superintelligent suggests surpassing combined abilities of all humans across various tasks. Musk made this forecast during a live-streamed interview of his social network X, highlighting major constraints such as power demands and shortages of advanced AI training chips. He also emphasized the evolution of limitations from chip scarcity to challenges in power and voltage supply, suggesting electric supply could become the next hurdle in artificial intelligence advancement. And it's not just going to be electric shortage, but also the shortage of potential chips. But moving on to chips, Intel Corporation has unveiled its latest AI chip, Gaudi 3, aiming to rival Nvidia Corporation in the rapidly expanding semiconductor and chip manufacturing space. The upgraded processor, set for widespread availability in the third quarter of this year, promises enhanced performance in training AI systems. It also is going to execute finalized software, and despite previous challenges in gaining market share against Nvidia, CEO of Intel now anticipates Gaudi 3 to make a significant dent on Nvidia. However, competing with Nvidia's dominant position, bolstered by success of its H100 accelerator, this opportunity now also presents formidable hurdles for Intel. Nvidia's forthcoming Blackwell chip platform further solidifies its position. Intel asserts Gaudi 3's superior speed and energy efficiency as compared to Nvidia's H100, projecting advancements in AI model training as well as software execution. And it seems that artificial intelligence, chips and semiconductors seem to be the flavor of the day, because in a bid to bolster semiconductor production, the US plans to grant Samsung a $6 billion subsidy to expand operations in Texas, doubling its investment to over $44 billion. Reuters sources reveal the move aims to reinforce domestic supply chains and reduce reliance on China as well as Taiwan. More details in this report.
The US is set to give Samsung a subsidy of over $6 billion to expand production in Texas. That's according to two Reuters sources. They say the move will be unveiled next week and will support construction at facilities across the state. As part of the deal, Samsung will double its investment in the US to over $44 billion. There was no comment on the report from Washington or the company. However, the two sides have been courting each other for a long time. Back in 2022, US President Joe Biden toured a Samsung plant in South Korea.
So this is the moment, in my view, to invest in one another, to deepen our business ties, to bring our people even closer together.
Speaking during the visit, South Korean President Yoon Suk-yeol urged Biden to provide incentives for firms from both nations to invest in each other's countries. Now, the new deal would be the latest in a series. One of the sources said it would be almost as big as an earlier move to grant Taiwan's TSMC $6.6 billion in support. Last month, US giant Intel was awarded even more. It all comes under the terms of the CHIPS and Science Act, passed 2 years ago. The legislation provides for almost $53 billion in subsidies, and is meant to reduce US dependence on China and Taiwan in the supply of semiconductors.
Well, you just heard South Korean President Yoon Suk Yeol, but staying with South Korea, the president has now announced a bold almost $7 billion investment in AI by 2027, bolstering the nation's semiconductor prowess. With a dedicated fund of 1.4 trillion won for nurturing AI semiconductor firms, South Korea aims to compete with global leaders like the US, China and even Japan in semiconductor supply chains. Chip exports, a linchpin of South Korea's economy, hit a 21-month high in March, emphasizing the semiconductor significance. President Yoon characterizes the semiconductor competition as an industrial and national battleground, underlining the strategic importance of AI chip development. The investment strategy prioritizes research and development in AI chips, including neural processing units and high-bandwidth memory chips, while also focusing on next-generation artificial general intelligence or AGI, as well as safety technologies. Yoon set ambitious goals for South Korea, aiming to rank among the top 3 countries in AI technology by 2030 and capture a 10% share of the global systems semiconductor market. And continuing with AI, from Facebook's crackdown on fakes to Elon Musk's latest prediction, here's a roundup of all the stories from the world of artificial intelligence on AI Weekly.
From Facebook cracking down on fakes to a new prediction from Elon Musk, this is AI Weekly. Facebook is set to start labeling content generated by artificial intelligence. Video, images, and audio concocted by bots will get a Made with AI stamp. More prominent labels will go on content deemed likely to deceive the public on an important issue. It all comes before the US presidential election in the fall. Alphabet boss Sundar Pichai says AI is set to transform most jobs, but he says the future won't be what we think.
I can't imagine explaining what a YouTube creator means to someone from 40 years ago, right? Leave alone to a farmer from 100 years ago, right? So there are entirely new classes of jobs which will be created.
A survey by staffing firm Adecco showed that 41% of senior executives expect AI to mean smaller workforces. Elon Musk predicts that AI will be smarter than any human by 2026 at the latest. His startup xAI is training a new version of its Grok chatbot, which should be ready by May. Musk says a shortage of chips remains a big drag on development. Even mining firms aren't safe from the AI effect. Commodity trading firm Trafigura says the world will need as much as 1 million more tons of copper by 2030 to build data centers and the like. Since China is the main producer of the metal, some Western capitals are worried about supplies. And AI is helping to spot insect invaders. British scientists are using it to find Asian hornets, an invasive species wreaking havoc on European bees.
There's a camera mounted above it which takes images of these insects so that then the AI can watch all of these images and identify what insects it's seeing with a specific lookout for Asian hornets.
The scientists say AI can identify insects without harming them, unlike traditional traps which are used to kill large numbers of innocent native bugs.
Well, all that and more happening in the world of artificial intelligence, but in the world of real intelligence. Election season, not just in India, but across the world. In November, should former US President Donald Trump secure another term in the White House, Axios reports his focus will shift to federal investigations and prosecutions targeting current US President Joe Biden and his family. Citing sources close to the Trump campaign, it suggested that a potential Trump Department of Justice would mirror the actions of the Biden administration. Additionally, Trump allies believe recent federal charges against Trump could set a precedent for pursuing Biden. Despite facing numerous federal criminal charges himself, Trump remains a formidable contender for the Republican nomination. However, potential legal issues loom large, including ongoing civil cases in New York related to tax fraud and defamation. And in a legal battle, special counsel Jack Smith asserts before the U.S. Supreme Court that no individual, not even a U.S. president, is above the law. The brief challenges Donald Trump's immunity plea in the face of charges related to the 2020 elections. As the court prepares to weigh Trump's claims, a group of retired military officials back Smith's stance, highlighting the case's implications for democracy and national security.
No person is above the law, not even a U.S. president. That's what special counsel Jack Smith is arguing in a brief to the U.S. Supreme Court, urging the justices to reject Donald Trump's bid for immunity from prosecution on charges of plotting to overturn his 2020 election loss.
And they're not taking this White House. We're going to fight like hell.
Smith filed the brief Monday before the justices hear oral arguments on April 25th over Trump's presidential immunity claims. In his brief, Smith said, quote, "The effective functioning of the presidency does not require that a former president be immune from accountability for these alleged violations of federal criminal law. To the contrary, a bedrock principle of our constitutional order is that no person is above the law, including the president." Smith is bringing 4 federal criminal counts against Trump in the election subversion case. Those include conspiring to defraud the United States, conspiring to obstruct, as well as obstructing the congressional certification of Joe Biden's electoral victory, and conspiring against the right of Americans to vote.
You don't concede when there's theft involved.
Trump has pleaded not guilty in this case and 3 other criminal cases he faces, seeking to paint them as politically motivated. He's the first former president to be criminally prosecuted, and he's argued for the importance of presidential immunity, saying, quote, "The threat of future prosecution and imprisonment would become a political cudgel to influence the most sensitive and controversial presidential decisions." But Smith's view was backed on Monday by a group of 19 retired 4-star U.S. military officers and other former high-ranking national security officials. They filed a supporting brief calling Trump's immunity claim contrary to the foundational principles of our democracy. They also warned that if his theory is not rejected, quote, "We risk jeopardizing America's standing as a guardian of democracy in the world and further feeding the spread of authoritarianism, thereby threatening the national security of the United States and democracies around the world." 2 lower courts have dismissed the former president's immunity claim. The Supreme Court's decision to hear arguments on his bid postponed his election subversion trial, giving Trump a boost as he tries to delay prosecutions while running for a return to the White House.
But let's move on now. Let's move on to the stock markets, and U.S. stocks closed with mixed results on Tuesday as anticipation built for key inflation data and upcoming earnings report. Investors are closely eyeing Wednesday's release of the Consumer Price Index or CPI inflation as they adjust expectations regarding the Federal Reserve's interest rate policy. Take a look.
U.S. stocks ended mostly higher on Tuesday as investors braced for key inflation data and the start of earnings season later in the week. The Dow closed essentially flat, the S&P 500 gained fractionally, while the Nasdaq added a modest 0.3%. Wednesday's hotly anticipated Consumer Price Index was at the top of most investors' minds as they tweaked expectations on the timing of the Federal Reserve's first rate cut. But Bill Fitzpatrick, portfolio manager at Logan Capital Management, says that while CPI will likely show still sticky inflation, investors should shift their focus more to corporate earnings and how companies are managing higher costs.
The earnings growth, the earnings season, everything we hear from the companies really should be the driver of financial performance here over the next few months here, not the CPI numbers. Those are going to be a little bit higher than we would like, and we need to navigate through that environment.
Analysts are expecting aggregate S&P 500 first quarter earnings growth of 5% year over year, down from 7.2%. First to report results Friday are JPMorgan Chase, Wells Fargo, and Citigroup. Shares of all 3 banks fell slightly on Tuesday. Among other movers, cryptocurrency and blockchain-related stocks declined, tracking falling Bitcoin prices. Exchange operator Coinbase Global shed about 5.5%. Shares of Google parent Alphabet gained more than 1%, pushing the company closer toward the $2 trillion market cap threshold. And shares of Moderna jumped more than 6% after the drug maker's individualized cancer vaccine developed with Merck showed promise in an early-stage trial.
Okay, staying with the US small business sentiment hit an 11-year low in March, driven by mounting concerns over inflation, as revealed in a survey by the National Federation of Independent Business. With an optimism index sinking to 88.5, the lowest since December 2012, worries about rising input and labor costs weighed heavily on entrepreneurs, leading to a surge in average selling prices. Take a look.
Sentiment among U.S. small business owners in March slipped to its lowest level in more than 11 years amid rising concerns about inflation. That's according to a survey out Tuesday from the National Federation of Independent Business. The organization's Optimism Index, which has averaged a reading of 90 over the past 50 years, came in at 88.5 last month, the lowest level since December of 2012. It also marked the 27th month in a row that the index's reading has fallen below the 50-year average. Inflation worries were the main culprit, with 25% of business owners reporting that higher input and labor costs pose the biggest challenges. As a result, the share of businesses that raised their average selling prices in March rose 7 points from the month before. That aligns with reports showing a pickup in consumer prices in the first 2 months of the year. The Federal Reserve has hiked interest rates to bring down decades-high inflation, which peaked at an annual rate of about 9% in the summer of 2022. The latest data, due out Wednesday, is expected to show inflation has cooled to a rate of 3.4%, significantly lower than the peak, but still above the central bank's 2% target.
All right, high inflation there in the US, but let's move to China. And amidst China's own economic shift, many luxury brands are facing challenging times. Gucci's stock warning triggers stock market turbulence. Louis Vuitton and Burberry anticipate sales declines, while Richemont seeks growth opportunities amidst uncertain market conditions. Analysts highlight uneven recovery patterns, noting increased consumer caution in luxury spending. Take a look.
Chinese shoppers are watching what they spend, and that could spell deep trouble for some of the world's luxury brands. Top names are due to start reporting earnings next week, and investors are braced for signs of a steep slowdown. Among the negatives was a surprise warning last month from Gucci owner Kering. It said first quarter sales would fall 10%, not the 3% forecast by analysts. The French giant blamed a slump in Asian sales at Gucci. Shares in the firm are down 15% since the warning. LVMH, the world's biggest luxury group, has seen its stock dragged lower too. Analysts at JP Morgan forecast it will see flat sales over the first quarter. Meanwhile, Britain's Burberry is expected to see a decline of 10%, while Switzerland's Richemont, owner of brands like Chloe, may just eke out some growth. Industry experts say it all comes back to China. One told Reuters that all growth engines have been turned off, describing the slump there as unprecedented. Analysts at HSBC say Chinese tourists in Hong Kong, Macau and Singapore just aren't spending like they used to. Sales numbers will also suffer in comparison to this time last year, when shoppers were on a post-lockdown spending spree. What growth there is may not be evenly shared. Analysts say consumers pinched by a rising cost of living are getting more selective about luxury buys. That could mean continued gains for strong brands like Louis Vuitton, but more of a struggle for others like Burberry, which are undergoing a revamp.
All right, staying with spending in China, electric vehicle sales in China saw their slowest growth rate in a year during the first quarter, with sales of electric passenger vehicles rising just 10.5% in March compared to the same month a year ago, according to industry data released on Tuesday. Take a look at what's happening in the Chinese electric drive market.
Electric vehicle sales in China grew at the slowest rate in a year during the first quarter. That's according to industry data released Tuesday. Sales of electric passenger vehicles rose 10.5% in March from the same month a year earlier. Trade body the China Passenger Car Association said sales totaled 1.03 million EVs for January to March. That was up 14.7% on the year, but the slowest quarterly growth since the second quarter of last year. It comes as automakers led by BYD deepened at discounts and offered financing tools to boost sales. Authorities have joined automakers in trying to convince consumers to buy cars to help jumpstart a sluggish economy. The launch of an electric sedan by electronics maker Xiaomi last month saw rivals announce further price cuts and subsidies. In March, BYD lowered starting prices for 9 models. BYD also forecast lower profit margins this year as the price war intensifies. But the automaker added it would ensure stable profitability by improving sales. Tesla hiked Model Y prices in China by $691 starting April 1st. But the US EV giant offered a time-limited zero-interest financing scheme for buyers of the base Model 3 model. Volkswagen and NIO have also launched auto financing plans with low interest rates to attract buyers.
All right, from wheels to the skies, the global airline industry is feeling the pressure of what's being described as a summer squeeze with travel demand soaring past pre-health crisis levels. Airlines are now facing challenges due to a drop in aircraft deliveries caused by production issues at major plane makers, both Boeing as well as Airbus. More details in this report.
The global airline industry is facing a summer squeeze. Travel demand is seen soaring past pre-health crisis levels, but it comes as aircraft deliveries drop sharply due to production problems at plane makers Boeing and Airbus. Some carriers have been forced to cut their schedules to cope with the lack of available planes. At the same time, the number of travellers globally is due to hit historic levels. 4.7 billion people are expected to travel this year compared with 4.5 billion in 2019. Last December, the International Air Transport Association had predicted 9% annual growth in global airline capacity this year. That estimate looks optimistic following Boeing's safety crisis. One leading industry analyst said passenger carriers will receive 19% fewer aircraft this year than expected. They further said US carriers will receive almost a third fewer aircraft than planned a year ago. That's because several airlines depend on Boeing's 737 MAX planes. The plane maker is in a sprawling crisis that erupted after a panel blowout in January on an Alaska Airlines flight. Regulators have put a cap on production of the MAX as a result, but the company is not hitting even that level. In Europe, low-cost airline Ryanair has had to cut some routes, while in the US, United and Southwest have cut back flying and adjusted hiring and staffing plans. Adding to the problems, many jets made by European giant Airbus are grounded due to engine problems. Now air carriers are spending billions on repairs to keep flying older, less fuel-efficient jets, and they're paying a premium to secure aircraft from lessors. The leasing market is booming due to the shortage of new planes. Trade group Airlines for America said airlines are spending 30% more on aircraft leases than before the health crisis. It further said hanging on to old planes meant repair costs at United, Delta and American were up 40% last year from 2019. Yet a further sign leading airlines could be in for a turbulent year ahead.
Moving on, an explosion at a hydroelectric plant in northern Italy has claimed at least 3 lives and injured 5 others, with 4 people still missing. And this according to Regional Fire Chief Francesco Notaro. The blast occurred during maintenance work at power company Enel's Berge plant near Bologna, causing part of the underground structure to collapse and triggered a fire, along with flooding of up to the depths of 60 meters. Divers are aiding the search for missing persons, while Prime Minister Giorgia Meloni expressed solidarity with the affected families. Enel Green Power CEO Salvatore Bernabe visited the site, confirming no damage to the dam. Well, the European Court of Human Rights ruled in favor of elderly Swiss women, finding the government's insufficient climate action violated their rights and setting a potential precedent for climate litigation. More details in this report.
The European Court of Human Rights ruled in favor of a group of elderly Swiss women on Tuesday who had argued that their government's inadequate efforts to combat climate change put them at risk of dying during heat waves. The verdict, which cannot be appealed, is a potential turning point for climate action. It could compel the Swiss government to take greater action on reducing emissions, like revising Switzerland's 2030 emissions reductions targets to get in line with the Paris Agreement. Anne Mara is the co-president of the group that filed a climate lawsuit.
The ruling today is a historic ruling, and we are really happy to have carried this all the way to the European Court of Human Rights. Our country should do what it has not done until now, meaning to take ambitious measures to protect our health and protect the future for all of us.
Court President Siofra O'Leary said the Swiss government had violated the human right to a private and family life by failing to put in place sufficient domestic policies to tackle climate change.
This included a failure to quantify, through a carbon budget or otherwise, national greenhouse gas emissions limitations.
The Swiss government said it will now analyse the ruling and review the measures Switzerland will take in the future. The European Court's ruling, brought by more than 2,000 elderly women, could have a ripple effect across Europe and beyond, setting a precedent for how courts deal with the rising tide of climate litigation. But in a sign of the complexities of climate litigation, the court rejected two similar climate-related cases. The first, brought by 6 Portuguese youth against 32 European governments, and another by the former mayor of a low-lying French coastal town. Climate activist Greta Thunberg attended the hearing in support of the Portuguese group.
And this is only the beginning of climate litigation. All over the world, more and more people are taking their government to court, holding them responsible for their actions.
The cases before the 17-judge panel in Strasbourg, France, joined a growing trend of communities bringing climate lawsuits against governments with arguments resting on human rights law.
All right, climate litigation could very well be the future of governance and lawmaking. But moving on, before we close the bulletin, Brazil's Sakaka Museum marks 22 years, a hub of culture, history and science nestled in urban Macapa's natural setting. Take a look. Well, that's all we have for you on this edition of World Business Report, but news and updates continue right here on News 9 Live. So stay tuned and stay updated. Thanks for watching.